What's happening in the housing market and how do housing costs compare to those of renting? A couple of common questions that we always get. The thing that jumps out at the moment is the lift in available supply. Listings in both the housing market and the rental market have been rising, about 60% higher in the rental market relative to last year, and about 20% higher in the real estate market. So that extra supply has had the expected impact on pricing in those markets. We've seen, after a very strong run, rents seem to have flattened off, and in some parts of the country are probably falling a little bit. And in the housing market, we've had extra supply just keep a lid on house prices, so house prices have essentially flatlined now for about 2 years. So what about comparing the two, the cost to buy versus the cost to rent? Well, on our numbers, the operational cost to buy the average or median home is still a lot more than the equivalent to rent. But that gap has reduced a lot over the past 12 months. Now that's because with house prices effectively flat, we've had these big falls in mortgage rates, and that's lowered the serviceability costs of a mortgage. Some of that, of course, has been offset by much higher costs for the likes of rates, maintenance, insurance, things like that, costs that we all know are going up quite rapidly. So affordability is still stretched, but less so than it was. And that drop in serviceability costs is part of the reason we expect a little bit more housing demand to start turning up from here. Now, whether that expected additional demand is enough to bump up house prices really depends on how it measures up to that extra supply I talked about. Now, our expectation is that we'll still get a modest bump in house prices this year, but that supply side of the story is one of the many areas of uncertainty surrounding our forecast at the moment.